All right. Hey, good morning and welcome. Thank you for taking the time to join this morning. As always, it's it's an interesting time of year because typically the market starts to bounce around and really respond to weather forecasts, but we haven't been doing that really but yet we've had lots of volatility. So what I want to do is spend about 15 minutes today just kind of unpacking that, looking at what our charts are telling us, and develop a game plan from there. So let's start with the conclusion. The conclusion is, I think that we've based for a while. Um, I think that the market has really responded um, strongly to the anti-inflation talk, right, or to the decrease in inflation and the macroeconomic contraction, and we've just rushed in to sell commodities as fast and as hard as we could because these funds think that's where that the Fed's got control of it, and so that's really increased volatility. And they've done that in the face of maybe the worst weather that we've seen in a long time. And I'm not just talking about here, I'm talking about the weather in Europe, talking about the weather in China, talking about the weather in South America, talking about the weather all the way across the US. It just hasn't been very good. And so instead of responding to the weather forecasts like the market normally would in July, we have just traded the macros. And so you see this giant sell-off in corn, right? And it's even more prevalent in wheat. Let's look at that chart real quick. So if you look at wheat, it's been so volatile, but the last 1, 2, 3, 4, 5, 6, 7, 8, 9, about 15 trading days, last 3 weeks, you know, let's talk about this total movement, right? We've had from 10 to 8:30, back to 10, down to 8:20, and back up to 9. That's $7 of total movement in 15 days. And yet you're reading lots of people talk about how the top is in and the game is over and we're oversupplied. Well, I don't think that. Let's put this in perspective. From 2014 to 2020, wheat didn't move this much in the total time cumulatively. It did not move $7. And when you see that kind of movement, what it is telling us is the market is uncertain. The market is off balance. The traders um, are are trading very fearfully, and they're trading much smaller as well. So if you've been watching wheat trade, typically it would trade anywhere from 10 to 50 contracts at a time. And lately, the last several months, you can watch it trade in one lots, like one contract at a time, 5,000 bushels here, 5,000 bushels there. And I think what we're seeing is our big traders just absolutely exit the market because they just don't know what to do with it. But if you start to read a lot of the data, what they're doing down in this area is accumulating. What they're starting to do is re-enter, and I think that that's going to help provide support. I'm not saying that they're going to push it straight back up. I think you got to have a catalyst for that. But I think that as they start to accumulate a position, that's really strong hands that will start buying, and we will have officially kicked out anybody that was weak all the way through this move. And if this move didn't do it, then for sure this one here did. And as the stronger hands start to accumulate, the volatility should start to contract, and you should start to base and trade a little bit more normally. Um, and so with wheat, you got to look at what our fundamentals are. We have um, we have the smallest crop that we've raised in I don't know, 30 years. We have the smallest acreage numbers that we've had in over a century. We have the biggest drought across the largest portion of the wheat belt that we've had in at least 20 years. And so planting is, acreage is questionable at best coming into the fall. I think we got to get some moisture before anything's going to work. Now, there is some moisture in the forecast, but we'll see if that develops, right? So with as far as our wheat position goes, I just like holding where we're at. I don't like selling anymore. I don't like taking any more protection. I think that we've got to rally probably back up to 10 first, and then we'll have to see where we are. The other wild card is Russia, Ukraine, and just how many exports are going to come out of that region. And the more I read, the deeper I dig, the less exports I think that there really are. I know that the headlines seem to be friendly about humanitarian grain corridors and things like that, but you read the facts and they're just not there. They don't exist. And so I think that we're being pushed around a lot by propaganda, and I don't think it's realistic to think that Ukraine exports are going to be near as high as what the USDA is claiming for them to be. So I think stay tuned. I think that this area is gonna hold and be a base for quite a while, and I think we should be looking up in wheat. I don't think we're going to see a big explosion like this, but I would expect us to kind of grind higher for the next several weeks. All right, now let's talk about corn, because corn is corn seems to be the weakest one. And what are we dealing with corn? Well, we're dealing with the largest and most liquid market in the grain complex, right? So you've got the highest volume of traders trading in this market. And so you've got a lot of guys that bought on inflation, and now they're the first to sell it. You can see that in open interest. So I'm going to put this line on, and here's your open interest as it has just imploded during the sell-off. This doesn't tell us that there's new shorts entering the market. This tells us that these are longs that have exited, okay? And here's the difference. In order for the market to really push lower, we now have to attract people that are going to short it. So the question is corn a good shorting opportunity from this level? And now let's talk about that, okay? If corn is a good short, then a couple of things need to be in place. One, we need to see an overbought condition, and we need to see it, and we need to see some technical strength from which to sell. And so let's just run through that real quick. Here's your stochastics. Certainly not overbought. Here's your RSI. It's trading mid-range. Certainly not overbought. Here is force index. Certainly not overbought. In fact, it's coming back up into where the bulls may have control. And last but not least, our MACD histogram. Certainly not overbought. Certainly not oversold. Just pure middle of the road. So condition one to attract the funds to really accelerate lower has to be probably an oversold condition or something technically to get them interested. Now, the second thing that they have to have is a fundamental reason to get short. And eventually, one of these days, we're going to come back to trading just traditional economics or traditional balance sheets for corn. So if this number is accurate, then you would assume that our balance sheet was going to grow. Well, we've talked about this over the last several weeks, and let me pull that balance sheet back up here. This is our corn balance sheet, okay? This is what the USDA has told us, that we have a carryout of 1.47 billion bushels with this ending stocks to use at the magical 10% number. But a simple yield decrease to 174, and we are sub a billion bushels, and we are down to below pipeline levels, which would imply much, much higher corn. So the risk, given the weather that we've had, the funds have to decide, is this the risk that we move closer to 180 or that we drop closer to 174? And then what is happening with demand? Is there any tangible evidence out there that our demand is slowing? Well, everyone points to the export numbers that we haven't been recently selling. But the USDA is telling us that our export numbers are still good. So either the market already knows that exports aren't there and they're trimming the use number, or the market is off balance. So I think that what we're seeing is consolidation into the realization that our balance sheet may contract strongly and we've got to work higher. Now, I don't know if that turns immediately or if we've got to kind of grind lower and test these lows again before we work higher. But I think that the other reality is that this move preceded any change that the USDA might make. So if the USDA comes out tomorrow and says, hey, our demand is bad, I'm not sure that we react bearishly. In fact, we may get that bullish reaction to bearish news because the market already priced it in. We may have already priced in a yield of 177, 178. We may have priced in some demand destruction. We may have priced in some of that already because this was very, very fast and it was probably overdone a little bit to the short side. So I don't think that from a balance sheet perspective, I don't think that we are out of the woods. Now let's talk about yield for a second. We talk to guys all over Kansas and Nebraska for the most part, and I think certainly in Kansas, dry land is in trouble, no question about it. Irrigated is probably APH or slightly below. I don't hear anybody saying, "Hey, our irrigated corn is just going to knock the top of it." It's just been too hot. But you get into Iowa, and we did have a large grower tell us this week that he's expecting all-time records because they're in an absolute garden spot. They're expecting yields over 300 farm average, and they're expecting soybean yields to approach 100, which is just unfathomable for us. So the market knows this, and it's already pricing some of that in as well. So you've got this setup where the East is okay and the West is in a drought again, and you've got traders trying to bang that around. I would argue that that's priced in, and that any yield decline or any weakness has got to be bought. So I think our analysis on corn is the same as it was last week, which is we're going to watch this low right here, and we're going to watch this high, these shelf high right here between 562 and 577. And so long as those hold, and so long as something doesn't materialize, then we're going to look for a move back up into the somewhere between 650 and 680, 690, somewhere between this 38.2% retracement of this move here and the 61.8%. I think that we're going to get that move because we've just got too many bullish catalysts that are out there and not yet priced in. Eventually the market's got to reconcile the balance sheet risk rather than the risk of demand destruction. It's really unusual for the market to trade just the demand side of the equation stronger than the supply side in the month of July. So either the market knows already and we've already priced it in, or we're overdone and we got to push this back to the upside. Now the same transfer of an accumulation of positions is happening inside corn as is in wheat. So strong hands are starting to accumulate corn down in this area, and no different than wheat. And I think that that's going to provide immediate support for it as well. Now, soybeans, let's talk about them. They've been the weakest market all along. This entire move up really made no sense with soybeans because South America is going to grow so many, and our balance sheet's just not that tight for beans. But the market didn't seem to buy it, and now even after this even down into this bottom down here, what we're seeing is all these lower shadows, right? The market just keeps getting bought, and the rumor is that China has been buying, and that we've been and that they've been buying as many as 10 cargoes or whatever, and that's in the face of South America that's been controlling the export game. So beans have been subject to the same macro liquidation and macro issues as corn and wheat, and and yet they've really stayed in there pretty strongly, given that the size of the South American crop could have. So I have a comment. I want to read this. Thanks, Bob. Bob's telling us that he's expecting rail corn probably has to be imported right into fall harvest, and so that's. I think the importance there is that if last year's crop at record size was barely enough to scratch us into the new crop year in Western Kansas, and if this year's crop is millions of acres less and we have a less yield, then what's the likelihood that this year's crop is going to get us all the way to next year's harvest? And so if you're an end user and you're looking at your needs out through May, June, July of next year, this might be the absolute best time in the world to get coverage on, because it just doesn't make sense that you can have the same or greater demand and a much smaller crop and argue for lower prices. So I think it's bullish longer term, and I think it kind of reinforces the fact that any bearish news that we've had has already been priced in, and that we ought to be looking higher first and foremost. This move certainly was not very fun, right? And we thought it might come down. This is why we thought we should sell some, but of course we did not think we'd take $2 off in 15 days or whatever it was. But futures markets tend to overdo themselves one way to the other, and a lot of times to digest a move the size of the move that we had, you have to have some extreme moves to correct it. So you can correct in time and you can correct in price. And I think what we got here was a big price correction. Now we're marking some time, and now we've got to decide whether we've got to work back higher or not. Everybody out there is telling us that the top is in, that the whole inflation trade is done, and that we'll never look back again. I'm definitely not in that camp at all. There's not a great technical reason on the chart to tell us that, but watching what the funds are doing, the accumulation that they're having, the crop size that we have, the balance sheet risk that we have, I don't think that we're done at all. And I think that the move that would catch the most people off guard, the strongest, would be a strong move back to the upside. So I think we've got to be super patient. I think we've got to wait and see what happens, and look for information that comes to us that would change our mind. And as of right now, we just don't have that. So that's what I've got for you today. I know that's not a lot of new information, but we definitely need to watch this 577 area and make sure that it holds. And we want to make sure that our positions are able to be moved quickly. Bob, okay, thanks, Bob. Corn basis trading $1.30 to $1.45 December delivered Garden City for October, March. So, Bob, when was the last time that? Here, I'm going to unmute you. If you do you want to talk to this? When was the last time it was that high at harvest in Garden City? Well, we'll I'll get that answer from Bob later today, but I'm guessing that it's been a while since it's been quite that high in Garden City for harvest delivery. So I don't think that bodes super bearish, and I think that patience is definitely got to be required. Okay, so that is 50 minutes, or that is 20 minutes at 7:50. I hope that provides a little bit of clarity for us, and I hope that gives you a little bit of guidance that we're going to be patient and wait and see exactly what happens, or at least get some sort of news that tells us, hey, yeah, we got to go lower because we truly did destroy some demand here somewhere. But I don't see anything out there that tells us that that's the case. Remember, there is risk trading in futures and options, and you should only do so in light of your own financial condition. If you need help, please call us and talk to us. We're happy to work through strategies to manage that risk if you're not comfortable with the downside. Otherwise, we will wait and we will talk to you next week. Have a great week.